Hello, everybody. It's Michael Jaco with Unleashing Intuition Secrets. I have Dr. Kirk Elliott back with us. We're just chatting about the fires and the heat in Denver area. Wow, it's crazy sounding.
When we didn't get really any snow at all this year and very little rain, and so forest fires are just a big thing, but it's just hot. And I was just talking to a client from Texas, and I'm thankful that I don't have heat plus humidity because she said it's like soup down there. It's just really hot.
Yeah. Well, hopefully this El Nino, that's probably going to be a record breaker, will send you guys a lot of rain and snow ideally, because Colorado River, supplies water to a lot of people.
They're
not getting it this year.
Yeah, they're not getting it.
Yeah.
But we'll get it eventually. Kind of goes in cycles. But
absolutely.
Yeah.
So the back and forth that's going on with the stock market and the silver and gold markets, precious metals markets is just a kind of wait and see. What are your thoughts on it?
I mean, I would say it's not just a wait and see. I would use this consolidation as an opportunity to allocate, because fundamentally there's a lot of shifts happening right now, and where the demand for gold and silver is going to be incredibly high. Because why? Because it's high right now, right? But you're seeing these competing messages of what are we going to do with interest rates, and what's going to happen to the price of oil, and how is that going to impact metals, and what's Trump going to do in Iran, and what's Iran going to do back to the United States. And I mean, so all of these news blips, 30-second sound bites, like when Trump bombed Iran again, because Iran decided, hey, it's actually a good idea for us to bomb some commercial ships. It's like, what, with civilians on it? You guys are nuts, right? So Trump retaliated, said, you're not going to do this. This is not okay, right? So then you see the stock market come down like 700 points or 600 points the next day. And then the next day it's up 400, and gold and silver came down. Yeah. Like silver came down like 4, and then 3 days later it's up another 4%. It's like, I mean, literally it's all over the place, right? So, but in the end, like we've talked about numerous times, this is noise, right? And I would expect volatility for a while, because you've got these major mixed messages coming out of financial media right now, out of the fundamentals of the market. So for example, and how do we weigh these things out, and where do we think it's going to go? Because the messages I'm going to tell you are truly competing. So during times of war and conflict, generally gold and silver go up. That's a flight for quality. Well, why didn't it? We've got war and conflict in Iran, right? It's because oil is involved. The price of oil went up. So you can't lower interest rates when you've got inflation. So Kevin Warsh said, no, we're going to lower interest rates. Are you kidding? We're going to keep them higher for longer. Well, then the price of oil came down like a month ago because there was a ceasefire, right? And now it's climbing back up again. But here's where I think you're going to see, even if the conflict persists, I think you're going to start to see oil creeping down, because something weird is happening with supply and demand. So just like any business owner, if your cost of goods are going up, you're going to find another supplier, right? So what has China been doing since the end of February, when this conflict started and the Strait of Hormuz was shut down and they couldn't get the Iranian oil? See, China is Iran's number one trading partner for oil. I mean, China's the largest purchaser of oil on the planet to begin with, right? But what did they do? They started looking for other sources because they couldn't get it. The strait was shut down. They couldn't get their oil and they needed it. So they started looking elsewhere. Well, not only did they do that, but internally, China's looking at this escalating cost of oil and say, maybe we should strategically start embracing other green technology, right? So the demand for Chinese, the Chinese buying oil is actually coming down, not going up. So what does OPEC do? The OPEC plus nations have decided, let's increase our production by 188,000 barrels a day. Why would they do that, right? Because when you have increasing supply and lowering demand, what's that going to do to the price? It's going to cause the price to come down. So OPEC is saying, hey, world, the prices, we're keeping these prices contained. So why don't you buy from us rather than looking elsewhere to European oil or Asian oil or North American oil, right? Why, we're going to lower our prices here in OPEC. So that's causing the price to actually not go up as it probably should during time of conflict. And ultimately, I think it's going to come down. But what would you do if you're Kevin Warsh now? You're thinking, okay, so we've got this interest rate policy and we really do need to lower interest rates because the U.S. economy stinks. And let's just face it, it's bad. And I'm going to go over some of the news as why it's bad.
Okay.
So we do need to lower interest rates. And now we might be able to, right? So even if you're looking at some of the predictive markets like poly markets, right, or Kalshi or something, right? So shockingly how accurate some of those places are. But prior to a week ago, it was a 68% chance that we weren't going to get lower interest rates. Now it's 48%. So they're saying, this price of oil, maybe they are going to stabilize it. Maybe this lack of demand from China and the increased production, maybe the oil prices are going to come down, and maybe we can lower interest rates just once. See, I don't think it's going to happen anytime soon, but maybe by the end of the last quarter, maybe the beginning of the first quarter next year, we see one interest rate reduction. But I think after that, it's going to go up. Why? Because this isn't just a domestic U.S. thing, this devaluation of currency. It's a global debt pandemic, right? You've got countries all over the world that are printing money like there's no tomorrow. They're dumping U.S. treasuries, which is going to impact the dollar, which means that we're going to have to print. You've got other countries that can't make ends meet, which means they're debasing their currency. They're going to have to print. So ultimately, you've got to raise interest rates globally to actually slow down this global inflation. Now, if America doesn't raise interest rates, they're not going to be competitive with other nations, right? It's like there's some other countries, paying people 8%, and here we are, we're only paying 4%. Who's going to want the yield that we're giving them? Nobody. They're going to go elsewhere. So this is where globally you have competitive devaluations and currency wars, and ultimately it's completely, in a sense, independent of our own domestic policy, right? We're going to have to kind of go with the status quo of what the world is doing. And the world is in a world of hurt with debt and in an inflationary debt spiral. Now, let's focus on America just a little bit. So the job numbers came out last week. They're not good, Michael. They're not good. And so I want to go over that a little bit, because when you have a bad economy, how do you stimulate it? You lower interest rates to encourage people to spend, right? So this is why I think there is going to be a short to medium term desire to want to do that. But I think that's completely unsustainable with the global economy and the inflation that we're seeing globally. Yeah. So let's look at job growth. And I want to show you how it's actually worse than what the numbers actually look like. So employers added 57,000 jobs in June. And a lot of times you'll hear, clapping. It's like, wow, look, we created 57,000 jobs. But that's not good, because the expectation was 110,000 jobs, right? So it's like half, right? So it depends on who you're listening to. Is 57,000 good or is it bad? Well, it's half of what they were expecting. But in May, they created 172,000 jobs. So when you put it into perspective, it's really not very good. Now, let's add one more piece to that pie. What's happening in America right now? The World Cup, right? So the World Cup, it's estimated that the World Cup being in all these U.S. cities is bringing in $16 billion of revenue and created 40,000 temporary jobs.
Nice.
40,000, right? Those aren't permanent jobs,
Yeah.
right? When the World Cup is over, those are going to go away. But so we have to subtract those 40,000 jobs out of the numbers that were created, right? So 57,000 jobs created, subtract the 40,000 temporary jobs. In reality, we only created 17,000 jobs when 110,000 were expected. It's not good, right? And take this at its face value, right? Which is, it's not good, but imagine what it would have been if you'd have had in a Biden administration or a Harris administration, right? So it would have been an absolute bloodbath. It would have probably been negative, right? Not just low numbers and not meeting expectations, because Trump is a good businessman. It's like he's doing things to try to stimulate the economy rather than intentionally doing things to slow down the economy like previous administrations did. So this is not good. Now, the second number that came out was the unemployment rate. So that rate ticked down to 4.2%. It was 4.3%, went to 4.2% in June. Okay, that's negligible. To me, that's like a nothing burger, right? It's like, okay, some people were saying, well, it ticked down, this is good. It's nothing. It's 0.1%, right? So, but then let's look at wages. I heard some people championing the wages because hourly earnings grew 3.5% in June. Okay, so 3.5%, is that good or is that bad? Well, what did inflation grow in June? 4%. So people's wages are still this widening chasm between affordability, what people are making and what things are costing, right? It's 3.5% isn't 3.5% would be great if inflation were 1%. 3.5% isn't good when inflation's 4%. You're still falling behind. So when you add that up, you think this economy needs some help. It needs some stimulation here, right? So how do you do that? There's going to be a tendency to want to lower interest rates. When you do that, you're going to get a boost in gold and silver.
Yeah.
It's just what happens. But here's where, well, what happens, Kirk, when next year, when you think that interest rates are going to start rising? What's that going to do? Already the narrative is shifting, though, away from pure talk of interest rates to actual supply and demand, right? Which is where we're heading to, because there isn't a lot of supply on silver. There hasn't been for a long time, but the demand.
Yeah, all of the silver, like there's people that sell silver. I follow a lot of these people and their shops and so forth, and they're saying they're selling out of silver in their shops. So you would think that the price of silver would go up, but the dollar is kind of creeping up a little bit, so it does put pressure on it.
It does. So there's an interesting chart that I wish we could actually show the chart, but so I'm just going to talk about it, right? So it's a chart that shows the expectation of traders and in futures contracts. We're talking about paper here, right? Not necessarily physical, but the expectation is on the next futures contract, and I'm going to talk about gold and silver. So in gold, they're measuring 4 things. Traders that think the price is going to go up big, where the price is going to go up small, where the price is going to come down small, or where the price is going to go down big, right? So up a lot, up a little, down a little, down a lot. So imagine those 4. The ones that think it's going to go up a lot is literally like 90% of them.
Wow.
And the ones that, if you were to look at a chart and the down a little, up a little, and down a lot, it's kind of like in a small little range around negligible.
That's
right?
incredible.
Yeah.
And to give that more, the insight on that is the futures traders are considered the smartest traders out there.
Yeah. And so because what they do, they're not long-term holders. Right. They're usually options traders, which have an expiration date to their options. And so when they think that the price is going to go up, are they looking at this? Does this chart that I'm referencing, and by the way, the silver one looks almost exactly the same. So silver and gold, both expectation to go up a lot. But by when? Is it a year down the road? No. it's the next contract, which is August of 26, right? So they're expecting big increases. Now, it doesn't say how much, right? It's just that this is their expectation that it's going to go up a lot. Now, what's further confirmation that this is happening? If you look at the number of shorts again that big banks have, it's increasing. So back when silver was on this big run up from October to January 30th, price was going up a lot. The amount of shorts as banks needed to unwind their short positions was extraordinary, because as the price goes up, they would lose their shirt unless they get rid of those positions. The number of shorts is now going up again, right? So what does that mean? They think this is confirmation. They think the price is going to go up. We better unwind some of our short positions that we didn't get done before. Because when they were unwinding, and we talked about this a bunch when silver went up, 140% last year, they didn't unwind all of them. They unwound most of them. But the parts that are remaining, it looks like they're starting to unwind even more short positions, which means they think the price is going to go up. If they didn't, they wouldn't unwind those short positions. They would keep them, right? So this is where you start to add these things up. And I think we're at a really, really good spot to actually use this consolidation and this volatility as an opportunity to allocate at these prices, because I do think it's going to go up. The futures traders think it's going to go up. I think it's going to go up. Most people in the industry who follow commodities, who are traders, who focus on the markets, the big banks, they all think it's going to go up. What we don't know is when, right? But what we do know is if there's supply and demand discrepancies, low supply, high demand, prices will go up. What we can't determine, because we're not God and we don't control the markets, is how long is this volatility going to go sideways? How long is this war conflict in Iran going to go on? Is it going to be over tomorrow? Is it going to get worse tomorrow? How long? And we don't know. I mean, I would have thought it was hopefully going to be done during the last ceasefire, but it wasn't, right? It's very tricky and it's volatile. So take advantage of that and buy while their prices here hovering in the $60.
Absolutely. Because it seems like it may be they're pushing it down. So we're seeing big banks and governments are buying gold like crazy, massive amounts.
Yeah, like crazy, right? And so when you do that, when they do that, what do? We should mimic them.
Yes.
In the sense of do the same thing that they're doing, just with a smaller scale. Now, I've had a handful of clients over the last 2 days call about, it's like, well, Kirk, what about quantum computing? And I've heard stories that my metals aren't safe because quantum computing is going to steal it or it's going to hack our accounts. It's like quantum computing, A, isn't here quite yet. B, once it is, you know what I would be concerned about? Bitcoin, your crypto assets, your bank accounts that are all digital. I'm not concerned about quantum computing figuring out your password and being able to access an account. I'd be concerned about it shutting down or taking digital accounts. See, because even if an old-fashioned hacker, let's not even talk about quantum computing, figured out your password and got access to your accounts. Well, I don't care if it's your Walmart account, your bank account, your depository account, whatever it is. You know what happens when you want to liquidate your assets or you want to move them? You know what has to happen? You need to call our office. If it's not you, your stuff isn't being touched. And wouldn't you rather have tangible assets in a time of digital theft than something that's digital? I mean, some of these stories make absolutely zero sense to me, but people are scared silly because it's like, oh no, there's quantum computing. My tangible assets are going to get stolen. It's like, what? They're tangible assets. Literally. Silly story. The depository could burn down to the ground and everything that's in there could turn into a blob of metal. how did silver start? As a blob of metal that they put into a form to make a coin or a bar, right? So even if that were to happen, you still haven't really lost. Well, you lost fabrication costs. They would have to, go back to the refinery, melt it down again, make it soft, and make it into a coin or a bar. But a depository is not going to burn down. It's inside 24 inches of concrete, and there's nothing in there that could really burn, right? So it's a silly story. But here's where I want to just express to people the safety that you have in tangible assets versus something that's paper versus something that's digital or anything like that. It's just safer.
Yep. Unlike that one prison that's about to have the fire come to it that you were talking about.
the Supermax in Southern Colorado. Like the fire's getting oddly close, and it's like, wait a second. This is like, how close does it have to get before this turns into a really thriller movie script, right? Where,
right?
Like, oh, the Supermax prison, the most secure prison on the planet, needs to be evacuated, and there's terrorists in there, and El Chapo is in there, and it's like, what? This is crazy. But I'm sure they'll figure it out. But yeah, I mean, the fires in Colorado are pretty extreme right now.
That's sorry to hear that.
Yeah.
Colorado is definitely one of the most beautiful states out there.
Stunning.
Now, one way that you guys can participate in this little pullback. Now, a lot of people are like, oh, I don't know, it pulled back. It's like really low now. Are you kidding me? The highest it had been for like decades was $50. And everybody's like, if it gets back to that, that's going to be amazing. So we did have a nice high, pulled back a little bit. It's a buying opportunity. It's still the highest. If you go back in history, it's the highest it's ever been. So it's, a lot of people would have loved to have, the $60 silver for decades ago. But here it is, and it's going to go back up like we're talking about. All the banks and all the governments, they know it's going back up. They're buying it like crazy. So like you said, do what they do. And that's a smart way to go. And then the futures traders know it's going back up. So it's still a great buying opportunity. Dollar cost average in, continue to do it. And definitely the best place to store your silvers with Dr. Kirk Elliott.
Yeah, thank you so much for those kind words. And we are blessed to be able to go on this journey with people. And we're always just a phone call away to answer questions, to guide. It's like, when is a good time to buy? When is a good time to sell? Should I be concerned about some of these stories that I'm hearing? You know what? Give us a call. We're glad to go over it with you. And the bottom line is, no, don't be concerned about some of these stories. They're just stories. People are trying to sell stuff. What I want people to have is safety. And when you can couple safety and growth into one product that you don't overpay for, that's liquid on the back end, like zero, we don't charge anything, and it's bullion, it's a global commodity that's used for manufacturing, you don't have to make a market for it. Isn't that safe? Right? Unlike the poor company that just filed for Chapter 11 this week, Rosalind Capital, that's on Fox News constantly. I mean, they had to file for Chapter 11. Why? Because they didn't necessarily sell bullion. They got behind on paying for metals that clients had paid for them, according to thestreet.com. I read the article on what it was all about. It's like, wow, that's a really bad business model when you take somebody's check. But how could that happen? It happens when you're not selling bullion and you're waiting for your vendors to get you the coins or whatever that you want. And there was a delay because from October to December or January, the markets were screaming, right? So people were buying and they just couldn't get it in time. Well, by the time the metals came in for them to deliver, it may have been $30, $40 higher per ounce. They couldn't pay for it because they got the client's funds at much lower. They ultimately had to file for bankruptcy. See, this is why it's important, A, to have bullion, but B, to actually do business with a company that's actually buying the stuff when you pay for it, right? I mean, this is simple. It's simple stuff. But companies get in trouble, which is why I'm I'm so blessed that we are designed that the way that we are. We don't have an inventory. We don't operate like that. We drop ship directly from the depository. When you sell it, it goes back to the depository, and we don't charge for that. So anyways, a lot of scary stuff out there, a lot of things that cause fear and trepidation. I just want to put you all at ease. The markets will turn around. They always do, right? The conflict in Iran ultimately will be over.
Yep.
When you have bullion, it's liquid on the way out. So anyways, just hopefully some calming words that are calming people's minds.
Absolutely. And last year I was talking to our buddy Scott McKay, and he was thinking of selling because he wants to build this nice farm and so forth. And he showed me the buildings and so forth. I was like, Scott, this is not a good time to sell. So he held on, and look at the same pattern that we're seeing when this took off last time, guys. It's the same patterning. So we're getting ready to go to this level and beyond, in my opinion. Nothing's guaranteed, but this is the way silver and gold work. They pop, they come down, they settle a little bit, they gain a little, back and forth, create a base, and then they take off again. So if you look back a year ago, everybody was like, "Oh, it's at a high, it's not going to go any further." No, that's when it really blasted. So we're seeing the same thing, I believe, right now.
Same. I mean, you and Scott both got in when prices were low, and you know what? You got in.
Very happy with you. Thank you.
Yeah. I mean, the consistency though, you would allocate.
Yep.
I mean, you got in at low prices, you got in at high prices, and you know what? You don't care because you know that down the road prices are going to continue to go up. It's just what happens in a world where countries are debasing their currency. They're devaluing it by printing it in a world that's being de-dollarized, and the rest of the world is dumping U.S. treasuries like yesterday's trash. It's just kind of what's coming, which is what we're preparing for.
Yep. Yeah, I totally agree with you. I think they're gonna maintain the rates all the way through the rest of the year. We'll see, because I think we're going to get a dump in the stock market, pretty significant one, and that's when they're going to start to decrease the rates. But eventually, I agree, they're going to have to jack them back up again. So we'll see. We'll keep everybody informed. You've been fantastic about this. Your insights have been unbelievably accurate. So we all thank you very much. There's a lot of us that have been very successful with silver investing with you. So thanks so much.
You bet. My pleasure. We'll talk soon.
All right. Thank you.